Hello my dear students, hope all of you have written very well today's advanced accounting paper. Let me give you a review of this paper. First I am going to start with the MCQ part. So this is the booklet code I am solving MCQs. See, these MCQs are based on assumptions. The final answers which is given by ICA may vary. Now the first case scenario 1 sir. This question they are covering redemption of preference shares at a premium of 5%. There is a buyback of securities also happened sir. And they sold investments and ESOPs is also there. Now what are the questions they are asking? What will be the balance of the reserves as on 31st March 2025 excluding CRR? See, actually the answer is C sir in this case. General reserve balance and P&L account is 600 sir. Whenever there is a buyback of whenever there is a buyback as well as redemption of preference shares, to the extent of the nominal value of shares so bought back and redeemed, both will be transferred to CRR sir from free reserves. So therefore from the 600, what will be the nominal value of preference shares we are transferring? 200 plus we are buying back 8 lakh equity shares of 10 each or 20 rupees is the buyback price, but nominal value 10. So 8 lakh into 10. So therefore from this 280 will be transferred to CRR. Plus there is a sale of investments. 95 lakhs worth of investments are sold at 98. So therefore 3 lakhs profit we will add. So therefore 600 minus 280 plus 3, 323 plus securities premium 15.6. Actually original securities premium how much sir? 100. And here two things happen sir. One is redemption of preference shares at 5%. So 10. And there is a redemption of, there is a buyback of securities 8 lakhs into 10 rupees. So premium on buyback 80 lakhs. So total 90. We will adjust with, from the securities premium we will adjust. One is premium on redemption of preference shares, another one is premium on buyback. Plus, here we have issued 80,000 ESOPs to the employees. Out of 80,000, 70% they have utilized. Exercise 56,000 into the amount which will go to securities premium here is 10. So 5,60,000 which will be added to securities premium. So therefore 5.6. So this. So 100 minus 90 plus 5.6, 15.6. What will be the balance in CRR as on 31st March 2025? Originally 50 sir, original balance given in the question, plus how much we transferred from free reserves to CRR? 280. So 50 plus 280, 330 lakhs. What will be the cash and bank balance as on 31st March 2025? Original cash balance 320 sir. How much you used for redemption of preference shares? 210. How much is used for buyback? 160 plus 8.4. What is this 8.4 sir? Because of the ESOPs. 80,000 ESOPs, 70% exercised, 15 rupees is the price, right? So 80,000 into 70% into 15. So it will be 8 lakh 40 plus 98. What is this? Investment, sale of investment. So therefore 56.4 is the answer for this. Next. This next question, very simple question. I told you even in my important adjustment also this question I covered. Practical questions relating to schedule 3. When P&L account is having a debit balance, still it has to be shown under that reserves and surplus only. You see the total reserves 90 plus 40, 130, 130 plus 70, 200 minus 280. So therefore the total reserves and surplus is minus 80. So we need to show reserves and surplus 80. This is the answer. Next. During the process of internal reconstruction, there was a following adjustment sir. See, in this question there is a contingent liability. Obviously contingent liability means it is not there in the books. And it was subsequently settled and also 6,000 was received from the insurance company. So therefore the net answer is, so construction account will be debited 1500, bank account created with 1500. Because your original liability is 7,500 sir, but 6,000 you received from insurance company. So 1500 will be net amount which is debited to reconstruction, bank account is created with 1500. Next, case scenario 2. See, this question is relating to accounting standard 7, construction contracts. Now in this question, what are the question? First question they are asking, what is the amount of contract revenue to be recognized in each year? How much contract revenue recognized? Based on the percentage of completion. First to find out the percentage of completion. How to find out percentage of completion? What is the cost incurred till date? 35.25 divided by what is the total cost? At the end of the first year, the total cost. See, at the end of the first year, sir, you see 35.25 is the cost incurred divided by total estimated cost 150 into 100. So 23.5% completed, sir. So contract revenue into percentage of completion 37.6 is the first year revenue. Second year 65% completed, sir. So 240 into 65 minus already recognized 37.6. So 118.4. So therefore the answer is C, sir. Next, what is the stage of completion of the contract on the basis of percentage of, see this 23.5, 65. What is the amount of profit to be recognized at the end of year 1? What is the contract revenue recognized in first year? 37.6. What is the contract cost incurred in the first year? 35.25. So 37.6 minus 35.25. So 2.35. Next. So there is a question relating to, see, this company entered a contract to buy a machinery for 2 lakhs, sir. Later on they changed the method of production. So therefore this machinery is no more useful. So what we have done, this question, similar question is there in framework chapter. If you see, this question is there. Entire 2 lakhs will be loss, sir. Loss on change of method of production account debited to machinery account, and this loss will be debited to P&L account. But here the additional point what they have added is there is a scrap value by selling this machine 25. So what will be the accounting treatment for 24, 25? P&L account is debited with 1.75. Ultimately the loss of machinery is 2 lakhs, sir. But we are able to recover at least 25,000 from this. So 1.75 ultimately will be debited to P&L account. Bank account is created with 1.75 because we need to pay the amount, right? 2 lakhs we need to pay to the machinery, but scrap value we are going to get 25,000. So there is a net outflow of 1.75. Next, this ABC Limited is in the business of creating contents for various platforms, sir. Now this company is not provided. See, there is an intangible asset. The cost is 25 lakhs, sir. What they are feeling is the life is the asset has infinite life, therefore they have not provided amortization. No, sir. This as per AS 26, there is a rebutable presumption that the life cannot exceed 10 years. So in this case, you need to assume the life of the intangible asset is 10 years. If I assume life of the intangible asset is 10 years, 25 divided by 10, 2.5 lakhs is the amortization per annum. See, I started using this machinery from 2019. So 1920, 2021, 21, 22, 22, 23, 23, 24. So totally 5 years, including current year. So 5 into 2.5. So total it is 12.5, sir. So 12.5 I need to amortize to the P&L account. Next, case scenario 3, sir. This question is a combination of revenue recognition, AS 13 investments as well as AS 11. What are the questions they are asking? Ascertain the loss or gain to be charged in foreign exchange rates to be recognized in financial statement for the year ending 31st March 2024. Sir, in this question, sir, what happened is this company imported a machinery from USA, $250,000 on January 1st, 2024. On the date, exchange rate is 81. Now they are asking us what will be the exchange gain or loss at the end of the year. Sir, at the end of the year, it is 80. 81 has become 80. Therefore, the foreign supplier, the amount I need to pay, 250,000 into 81 initially. Now it has become 80. So therefore 1 rupee decrease, right? 250,000 is my what? Exchange gain, which will be credited to P&L account. What will be the initial disclosure event to be considered? 10th March. See, this question, AS 24 also, this in this question they have added 4 standards they have mixed, sir, in this question. See, in this question, what is the date of agreement, sir? 21st April. Initial disclosure event is date of agreement, that is 21st April, as well as plan approval and announcement, both has to happen. Plan approval when happened? 1st March, but announcement 10th April. So whichever is later we need to take 10th April. So 21st April, 10th March, sorry. 21st April, 10th March, whichever is earlier, 10th March. So 10th March is the answer. Next, how the recognition of revenue from sale of medicine to D Limited will be done by Hill under AS 9. So here the question is relating to revenue recognition. See, at the time of sale, there is no uncertainty. After recognition of the revenue, there is an uncertainty. What we need to do? We need to create a provision. So therefore, initially we recognize revenue for 50 lakhs. Since subsequently the company where we to whom we have sold the goods has become bankrupt, so 40 lakhs will be debited to bad debts. Okay. Next, how will you recognize the reduction in the value of investment? See, in this question, very simple question, sir. They have given investments worth of 200, sir. 50% current investment, that is 100 current investment, 100 long-term investment, sir. Now at the end, the realizable value has become 25. So that means out of 100, the realizable value I think has become 50. In this question, sir, yeah, realizable value has become 50. See this, 50. So therefore 100 is the original cost of the investments. And now the realizable value is 25. You know, in case of long-term investment, the reason should be other than temporary. Here, other than temporary. Therefore, long-term investment should be valued at a realizable value of 25. So therefore, 75 we need to reduce. So in case of current investment, 75. In case of long-term investment, 75. Total 150 we need to reduce. So here what they are asking, at what value, how will you recognize the reduction? In both the cases, total 75 will be transferred to P&L account. See this, 75 lakhs will be charged to P&L. This reduction of 75 in case of long-term investments is also charged to P&L account. And see, the last one is X Limited sold plant and machinery having WDU of 60 lakhs to Y Limited for 75 lakhs. See, in case of this is relating to lease, sale and lease back transaction. In case of sale and lease back transaction, we need to see what is the type of the lease back. Is it finance lease or operating lease? Here, the lease back is which lease? Operating lease. Now, in case of operating lease, we need to see three cases. First one is sale value is equal to fair value. So, in this case, see this. The sale value is 75, fair value is also 75. When the sale value is equal to fair value, whatever the profit or loss, it has to be recognized immediately. Therefore, 15 lakhs, 75 minus 60, 15 lakhs has to be recognized immediately. So, now let me cover the review of descriptive paper, sir. So, descriptive paper, the first question they have given from Accounting Standard 10. Now, this question looks little bit lengthy, sir, but easy only. If you have covered AS10 fully, I think this question you can easily manage. Nothing new adjustments are there, sir. The same adjustments which is there in the study material, these type of adjustments or questions are there in the study material. And second question, AS13, similar type of question you can able to see. Investment accounts preparation. And also financial statements of companies, very similar question which is there in the study material they have asked, sir. Even I told you in the important sums list, I told you this sum. And even before in exams, before I released one important adjustments, there I have explained some important adjustments. Like for example, any profit on reissue of forfeited shares, all these things we covered, sir. Similar type of question is there. Even dividend which is declared after balance sheet date is a non-adjusting event. We will not consider it. Same type of question, sir. Those who solve that important questions, 3 or 4 I have given now, I think easily they can get this. Next, relating to CFS, cash flow statement, sir, they have asked a simple question. Balance sheets, 2 points of balance sheet and some P&L account information they have given. Only important adjustment is disposal of fixed assets. Before exams, I released one important adjustment video. In that I covered this. So how to treat whenever there is a provision for depreciation and cost of the asset separately given, how to treat it we have given. And next question is 25. Same type of question is there in the study material. And next, sir, amalgamation question. Again, amalgamation question is also quite manageable. No new adjustments are given, sir. As usual, common question only they have given. AS21, this time they have asked a consolidated P&L account. Easily you can solve. Those who already solved consolidation P&L account 1 or 2 sums, I think this sum is very, very easy for them. Nothing great. And I told you, consolidation, dividend adjustment. Even before exams, I released important adjustment. There I covered this dividend treatment. Dividend given from pre-acquisition, post-acquisition profits. And last question, theory question, accounting standards. And also AS28, one question given. And I told you this question, dividend from past profits. If there is any inadequacy of current year profits and the dividend is given from past profits, I told you now, if you see the important adjustments video, I told you, this is the first topic I covered in the financial statement. Same question I covered. So that question they have asked. So, and branch account, very simple question only they have asked, sir. So overall, if you ask me, the paper was quite manageable, sir. Easily you can get good marks by this paper, and very happy that most of the questions they have asked from the important adjustments, important topics I covered before the exams. So all the best for next exam. Thank you.